Hello, my name is Brehon and I would like to welcome you back to the channel, where not only do we talk about great stocks, but we also talk about great books. Listen, family, I just wrapped up a phenomenal book, The Cash Flow Quadrant by Robert Kiyosaki. And if you get a chance, check out the playlist, check out the book summary. A lot of great information. A lot of great information can be found in books. Life-changing information can be found in books. But today, family, I want to talk about NIO. Some people have been asking me, what are my thoughts on NIO? Should I sell? Should I buy? What should I do? Okay. And, if you've been in NIO since $17 a share, $10 a share, man, you are still sitting pretty. All right. Remember, long term, NIO is a phenomenal company. And depending on how the market reacts, I still projected NIO to possibly hit maybe between 80 and $100 by the end of the year. All right. But as of right now, the market is starting to settle a little bit. But so when we take a look at these indicators that I have on the screen, I have the MACD, I have my 20-day moving average. Again, to me, the 20-day moving average is the king of all indicators. And I also have three lines here, which is some support and resistance. All right, some support and resistance. Now, when we take a look at the current trend of NIO, it is trending down heavily to the downside. All right. Now, I heard guys talking at the beginning of February, buy the dip. So you would have bought the dip at 59. Now you're at 57. People say, hey, buy more dip. Now you're at 50. People are saying, buy the dip. Now you're at 45.99. And oftentimes these people that are screaming by the dip, they are not looking at, the technicals. Let the technicals guide you when it comes to making these decisions, whether you want to jump into a stock or whether you're looking to exit a stock. Okay. Now, when we take a look at the MACD, the MACD gives you a great indication of the momentum of the stock. And a lot of times when the momentum comes into a stock, it pushes the price up. And when the momentum leaves the stock, it can push the price down. Now, when we do have these crossover, the orange is the purple line is the oscillator. So when the oscillator crosses over going up, that is a signal that there could be a potential reversal in pattern going to the upside or the downside. But that's not always a guarantee. Sometimes, like here we had the oscillator going down, we had a lot of sideways trading. Now, this sideways trading range here was any from $40 to $50, which was a huge range. Huge range. This would have been an excellent range to, play some put options or some call options. You definitely could have played that game. All right. Now, or you could have just got out. The price oscillator is trending down. You could have made a decision. I'm going to sell here and I'm going to wait for an opportunity to jump back in and maximize my investment. All right. So you could have jumped out. We could have waited. Now, you had the crossover going up. This would have been a great opportunity to jump back in. Then we could have jumped back in at $50 and we could have rolled this thing up to $64, $66. All right. Now we can see that the oscillator is beginning to trend downward. We can get out of this position, or we could just sit and just chill and just see how things work. All right. Now, again, it's trending down, but we have sideways trading. Then we had another dip, and now we are at a position where we're just at a consistent downward trend. And the question is, how long will that continue? Well, when you look at the stock, this stock has dropped off tremendously for the month of February from a high of $65 all the way down to $45.97. That is tremendous. That is a lot of volume. That's a lot of momentum that has actually left the stock. But as we can see the past couple of days, we can see that the oscillator is trying to tilt upward a little bit. We have green bars at the bottom, which is a sign that the momentum is actually trying to reverse. You do have some bulls trying to get back into the market, trying to push the price back up. But again, nothing's guaranteed. The momentum right now may be too strong for these bulls to really gain control of the market today. All right. So what we want to do, we want to sit back, we want to chill, and we just want to wait for this oscillator to cross over trending up. All right, that's a strong sign that the momentum is back. That is a strong sign that the momentum is in our favor. And this is a time when we want to jump in and we want to ride that momentum up. All right, but as of right now, we can chill, we can wait. I know some people use a strategy of once they see, 3 or 4 consecutive green bars at the bottom of the MACD, they look for an opportunity to jump in there before it crosses in on the before it crosses over on the MACD. All right, but again, as of right now, I would not be a buyer of NIO. NIO looks very, very bearish. It's been very, very bearish for the past couple of weeks. And I won't be jumping into NIO until I see uh the oscillator crossover and the momentum comes back into the stock. All right. So as of right now, I'm chilling. I'm sitting on the sideline and I'm waiting for the correct time to jump back into NIO. Now that's all I have. Please, if you like the video, if I added some value to you, leave a like, leave a comment, and please come back for more wealth building information. Peace.